right? And we have our market masters joining us now. Ashish Gupta, Chief Investment Officer at Axis AMC. We have Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments joining in as well. Gentlemen, good morning. Great to have both of you here. So we've got, two strong, one local asset manager, and we've got a global asset manager as well. I want to put the blame at your doorstep, Prashant, on a lighter note, for all the selling. So let me start by asking you, when is this going to come to an end? As I was making this point in the morning, at the end of September quarter, FIs were already underweight relative to India's weight in the MSCI Asia ex-Japan benchmark. And they've sold about some $25 billion since. So this is some serious selling. FI weighting will be at a decadal low, if not more. So what's going on?
No, I think what's happening is obviously, India's valuations have gone up ahead of all other emerging markets. And some people think it's a good idea to kind of lock in some gains. However, I think this is a period of a very interesting time with Trump coming back and tariffs again being in picture. So overall, I think for emerging market funds, flows will be very muted till we get some clarity on the tariff picture. And I think the other big basket in EM is China, which, people still are a little bit worried about the real estate sector and how things will develop there, and also whether the government will do a big enough stimulus to counteract some of the consumption slowdown there. So I think overall, the macro environment is a very cautious environment in the near term for EM investors.
Okay, all right. Got that. Ashish, just one other element, the local growth scare. Is there a bit of a growth scare? And is that impacting price action according to you? And how much of that is a factor? I mean, you're a veteran, and you're earlier after a veteran banking analyst as well. And that's a sector which shows us some of this stuff early on. So what are your thoughts on the growth side?
No, I think definitely, and I'll agree with Prashant that there is, of course, the global macro backdrop is not as strong, and really, to my mind, the trigger point of the big selling in for the institutions has been the fact that the U.S. yields have continued to go up, right? So U.S. 10-year yield is now up more than 80 basis points from where it was in the middle of the year. And that's really been, to my mind, a bigger driver of the FII outflows. Valuations in India have been expensive, and I don't think that really has changed materially for FII selling to happen. In fact, if you see the overall flows last year from FIIs, they have actually sold large caps, they have sold financials, which are the relatively cheaper sectors that are trading below their historic averages, and they have actually bought into mid caps, small caps. They're bought into the primary market, and we all know the multiples. Many of these new IPOs are coming in. The other factor, of course, more on fundamentals, is we have had muted earnings growth for the past 2 quarters. Earnings growth has come down to single digits. And in the last couple of days, we have seen the third quarter update coming from many companies, including the banks. And that is continues to be quite soft, right? So you have had some of the largest banks growing at 3, 4, 5% their loan book compared to history where they were growing at close to 20%. So I think there is both this aspect of the macro not being as accommodative as it has been in the past few years, as well as the fact that we have some degree of slowdown that has come in.
Ashish, hi. Great to have you as well as Prashant with us this morning. So let's just complete that point, and then I want to come to the valuation picture, because you folks in your 2025 note also highlight that valuations are another headwind for this market. But first, let's complete the growth point. The market wants to believe, or at least the narrative so far has been, that this is transient. Second half, things will pick up. The government will come in, government will start spending, and, in general, a lot of corporates that we speak to, they're also saying that growth will pick up in the second half. Do you believe that?
So I think if we look at what has led to this slowdown, and we can probably, on a macro basis, look at three factors, right? So one, of course, is the slower government spending. That was particularly impactful in the first quarter because of the election. That is certainly changing, and we have seen over the last 2-3 months that pick up. The second was the monetary tightening that happened, and there we have had since August the RBI stance becoming more accommodative and neutral. But unfortunately, we have had this simultaneously exit of foreign money and pressure on the currency. And the central bank intervention in the forex market has meant that despite RBI becoming more neutral, we have not really had the liquidity coming back into surplus. So I think the two headwinds on the fiscal side, we clearly see that has turned more positive. On the monetary side, I think we still haven't seen that because despite the RBI change in stance, the actions on the forex market have meant that liquidity continues to be in deficit. The third, and probably somewhat related to the monetary stance, is the negative credit impulse. So from a year ago, when loan growth was running at about 16-17%, loan growth has come down to about 11%. So I think that is really the other crucial piece that we need to see changing for growth to come back. So we need loan growth to revive. We need liquidity conditions to again become more amenable. In addition to, of course, the fact that the fiscal spending is coming back.
No, so just to understand what you're saying, and it's very interesting we're having this conversation today, because I think the first advance estimates of full year GDP, they're coming out at around 4:30 this evening. So we'll know the government stance on where we stand as well. But so Ashish, second half recovery in corporate earnings or no?
So I think compared to second quarter, there will be a recovery in earnings. But I think we will still not match the growth rates in earnings that we have seen over 22 and 23. So this year earnings growth will still be much lower than what we saw in the last 2 years.
All right. Hi, good morning, gentlemen. Good to see you in. Ashish, just want to drive home that point then with regard to earnings. The markets are down by close to around 10% or thereabouts from the peak. And we have seen that earnings pullbacks as well. EPS cuts have been to the tune of around 10%. So maybe some part of that earnings downgrade is mostly done. But do you think now there's a case where we see a PE, derating of the PE because we're giving it big multiples on the Nifty, 20, 22 times or thereabouts, because you're factoring in better earnings? Now, if the earnings don't come about, do you think that there'll be a case where you see the PE multiple as well getting derated?
So I think more than Nifty PE, I think where the PEs are vulnerable is more on the mid-cap and the small-cap space. So if you see small cap PE is still about 25 times, mid cap PE is still about 30 times. We have seen actually very interestingly in the last quarter, while the market has corrected by about 10%, surprisingly mid cap and small caps have actually continued to outperform. So I think the mid cap and the small cap index both are down only about by 6-7%. So typically, the market behavior you'll see is that mid cap and small caps are higher beta. They will go up more than large caps, and they will fall more than large caps, and that hasn't happened yet. I think one of the reasons is that market is still more optimistic on earnings here. We are seeing several parts where earnings have been more resilient. So whether you look at the capital goods sector, whether you look at real estate, travel-related sector, capital market beneficiaries, all of which are really more represented in the mid and small cap space, the earnings growth has not been bad. I think on the large cap, the earning disappointment has been largest. For example, if you look at banks this quarter, they'll probably report 0 to 2% YOY growth only. Right. So I think we will have to probably become a bit more focused on stock picking, which are the companies where earnings are more resilient. And that is where you will see probably P's holding on. Other pocket, you definitely have a risk of P derating.
Okay, all right. Got that, Ashish. Prashant, coming across to you. We have been talking about this FI selling $10-11 billion odd, but as a percentage actually of the total market capitalization, it's not that much. So maybe that's another way of looking at it. But the hope is that this outflow stops. But Prashant, since we've seen a bit of a correction from the top, I think in the past you've spoken about private sector banks as something that you like, pharma is something that you like. So if you were to pick up two big themes for this year, what would they be?
I think some of the stuff that Ashish talked about, a lot of the growth of loan growth has come down a bit. So if you see some towards the end of the back half of the year, some sort of pickup in growth in banks and private sector banks. And I would say, again, you have to be very selective. There's some banks that are reporting, microfinance or other issues, and other banks not so much. So I think selectivity will be the key in terms of when it comes to asset quality and some of that loan growth coming back. I think domestic pharma continues to be okay in the near term. And I think IT services, depending on where rupee dollar ends up, and if we see some sort of discretionary demand coming back in US, IT services might do as okay as well.
Prashant, not an immediate sort of concern. Maybe it is, I don't know. So weigh in on this, and this is not a sector or a sort of question on a particular sector, but the recent events, right? I mean, you must have noticed it, and you've been following what's happening with the incoming Trump presidency pretty closely. The recent attack, for example, on H-1B from the sort of, this is Make America Great Again supporters. I mean, the right. Is that how much should we read into it? Or you think it'll be, this is all noise, and we've not seen attack on, I mean, we've seen this against, the Chinese and paranoia about, but Indians have largely been kind of immune to all of this, at least in the US. How should we read into it? And yeah, go on.
Yeah, I think the H-1B issue, I think obviously, kind of Elon Musk kind of raised it, as kind of defending it. And I think Trump himself has said in the past that, he continues to see H-1B and support H-1B from his perspective. I think obviously there are pockets that within this coalition of Republicans, there are pockets that don't want H-1B, but there are other pockets that want H-1B. I think ultimately there'll be a balance, and I think the good news from the perspective is that what has really changed in this election is, I would say, the Silicon Valley has taken over politics in a big say. In the past, it had been more muted, but now it's come out in the forefront, and both from the Republicans and the Democrat side. So I think when it comes down to rulemaking, they're going to be very pragmatic and practical. And when it comes to H-1B issue.
Okay. Finally, Ashish, just to come back to, I asked this question to your peers at Franklin Templeton yesterday. We had them on a different show. I'm going to ask you the same question now. The resilience of the domestic investor, it's been tested for the first time since COVID, right? I mean, for the last 2-3 months, and the investor has been absolutely steadfast with those investments, the SIPs. Do you see that continuing? Because it's that wall of domestic money that has prevented a broader collapse. What are the insights you're picking up when you talk to people around you, your sales teams, etc.?
Well, I think we continue to see that part of the market being very steady. So actually, if you see a full year last year, domestic mutual fund inflows have been close to about 4 lakh crores. Total domestic institutions have put in about 5 lakh crores into the market. And actually, if anything, second half has been better than the inflow that came in the first half. So I don't think there is any volatility that we have seen. Of course, on the other side, in addition to the FIS selling, there has been a big wall of supply that has also come in. Right. So if you look at all the IPOs, QIPs, secondary stake sales by private equity and promoters, that number also actually is about 5 lakh crores last year. So it's actually larger than the inflows into mutual funds. So I think we have seen that piece balancing out. For now, I think the domestic flows continue to be steady, but I think at the margin, it is the FI flows that is driving the market direction for the past couple of months.
Okay, all right. We leave it there. Ashish, it's a pleasure having you with us here. Thank you very much for your time. Prashant, appreciate your time here on CNBC TV18 as well. Good chat, gentlemen, and looking forward to many more in the days and weeks to come. Well.